Welcome to the Wednesday check-in powered by the Gokhstein News Network. I'm your host, Landy, and today is December 10th, 2025. And we are going to start off today by looking at the FOMC statement. Now, we got the expected 25 basis point rate cut, but what's really important in here is really the tone of the statement and where we are now post FOMC rate decision. And I've mentioned before, I don't think that this rate decision was necessarily the most important thing. We kind of knew that the 25 basis point cut was coming. It's more about the employment data that comes next. And there is a few things in here that kind of, nod to that. And throughout this statement, which I'm not going to read verbatim, but they note that they are committed to achieve maximum employment and inflation rate of 2% over the long run, and that there is some uncertainty about the economic outlook. This is a nice way of saying they see that the job market is stagnating. This cut is needed, and that they're going to be open to be attentive to the risks on both sides of the dual mandate. But realistically, the employment side is going to start to take over here, especially, I believe, the most important numbers that are going to be coming out for the remainder of the month are going to be employment related. That's what the market's going to be watching as we head into next year, right, into January. And one of the big things, obviously, cut by 0.25% to 3.5 to 3.75, so 350 bips or 375 bips, which is 3.5 to 3.75% Fed funds rate. You have to forgive me, I'm actually getting sick. So, and they're going to carefully assess the data and evolving outlook to balance risks and, and really just, emphasizing their dual mandate. But in reality, the biggest portion of this is, as we know, QT has ended. And what they're going to be doing is right here. So in assessing the appropriate stance of monetary policy, the committee will continue to monitor implications of upcoming information for the economic outlook. The committee would be prepared to adjust the stance of monetary policy and if appropriate risks emerge that could impede the attainment of the committee's goals, yada, yada, yada. One of the biggest things in here, though, is that the committee judges that reserve balances have declined to an ample level. So they've done enough QT and will initiate purchases of shorter-term Treasury securities as needed to maintain ample supply of reserves on an ongoing basis. This is called balance sheet expansion. This is not quantitative easing. Tranche buys and regular tranche buys at that are of assets would be quantitative easing. We are not there yet. Now, I do think that they are going to have to adjust this based on what I'm seeing in the jobs data and the employment data as it relates to the other side of the mandate for inflation. Now, the one concern I know that they're going to express is going to be about inflation, and the primary metrics that they're going to be looking at are going to be oil and gas, right? And we have a bit of a divergence there between natural gas and oil pricing, where they are not correlated at the moment, with natural gas spiking aggressively due to what I mentioned on Monday, the cold snap in the U.S. and massive export demand. And we do have a pause on deck for OPEC Plus in terms of production. So while I do think that is going to play a role, and the largest role is going to be the oil side of things, and this is where they could still potentially thread the needle and avoid a recession, but they need to act fast, right? Now, how does that relate to what's going on in Bitcoin and broader markets? Not much has changed. I think that the more important information is going to be that employment data that comes out, tomorrow and in the coming weeks. All right. So employment-related data is going to be king, in my opinion, while keeping an eye on where inflation is headed as well. but I think the mandate is starting to really tip towards that employment side. Now, for Bitcoin is still trapped in a range. It's still in a compression here on the lows. All right. So this is, fresh lower lows off of, the chop sideways or the consolidation near the highs that made a new high. We had the nice uptrend into those highs with a little bit of chop solidation in a bullish fashion here that resolved to the upside before going sideways and then resolving an expansive phase through the lows down to where we are now. Now we're back in a consolidation period. This will break out sooner or later. It's going to be pretty easy to identify the daily versus the weekly levels for something like Bitcoin, and then we're going to go take a quick look at traditional markets, which I'm going to continue to incorporate into the analysis here, as there has been quite a bit of interest in it. Bitcoin is trapped inside of a wider weekly level or wider weekly zone between two closes. The 93.5 higher low close on the weekly and the $86,000 lower high close, with the inflection point being $89,000, which was a common swing or wick between the higher low and the lower high on the weekly time frame. So if we do break above $94,000, we can safely look up, in my opinion, to around $96,000. If we do start to see daily closes above, not swings, daily closes above, that expansive phase would start to target 96 to 98 inside of this weekly zone initially, with realistically the potential to head up to this 98 to 101 for a retest of this prior support as resistance. If we start to see dailies closing above, we can entertain moves to 102.5, which is a major weekly level, right around another Fibonacci level at 103,650 or so. But this is a big weekly zone. So anywhere above 101, you have to look at this as a very big cautionary area. We could short squeeze or have shorts cover into 98 to 101, but even getting above it, I don't think we see a true short squeeze, right? And in this case, even getting into this 102.5 to 112 region, which is a wider weekly zone that encompasses the 107 to 108 higher low structure that Bitcoin was trying to hold on to and even put in over here at the highs. That is a very key area inside of that. And I wouldn't be looking for any kind of a real squeeze to even get started until we saw closes on not just a daily, but a weekly above 112. All right, so just understand kind of the lay of the land. There is the potential to resolve the current daily compression back to the upside, but it has to meet the conditions. Right now, it's got to get above $93.5, $94,000. So definitely above the weekly at 93.5, get above the dailies at 94 to go and test 96. And then above there, that'd be expansion into what is going to be viewed as resistance between 98 and 101. And if you're aggressive on swings, possibly even up to the 102.5 region or so, in and around there. It's all about where, if it gets to these areas and rejects, where does it find support back on the downside if it does do that. Now to the downside, inside of this range, anywhere below 89, we can start looking towards the bottom side of this range and the last daily high or low swing at 87.7 or so. Anywhere below there, we're probably looking at 86 to which is the weekly, to the swing low here at 84. If we start to see closes below 86, which is right around where the lower second is coming in right now, just shy, it's at 80, 85, 550. If we start to see closes below the lower second outside of the weekly structure here at 86, look to 84. If we see any closes below there, that's confirmation of breaking an area of support or the last swing. Before, testing lower, essentially. This would be the most recent swing low inside of this weekly range at 87.7, 87.8. But realistically, if we start to see 86 drop, we'd be below the lower second. And if we see 84 drop, especially on a close, if we haven't already headed down to test lower in the $80,000 region towards $80,000 even or so by this by the major swing low down here, then I'd be looking for that. and that would be a zone of interest between initially $80,000 to $78,000. And if we start seeing closes below 78, we're looking to the mid to low 70s, but mid 70s first, 74 $75,000 being the base case there, and then potentially more to some areas of interest, the prior highs 69 to 70, and then digging down into that $65 to $69,000 where we have a big volume node down there in the 67 to 67 and a half region as an area of interest. So there's really only two big scenarios. It's break to the upside, get above 94 to 96 and start testing the overhead resistance 98 to 101, or resolve this to the downside below the weekly at 86 to 84 and really start going for this larger weekly zone down there. Now, as that relates to the weekly, we're seeing that this is pretty much in line with expectations based on the weekly band setup, with the lower second standard deviation being right there at $86,000. We drop it, and you can see that from a volatility standpoint, the lower third is now encompassing that bottom side range. And overhead, if we see Bitcoin starting to close, especially on the weekly, above around $96,000 by the lower first, then we can start looking up to 98 to 101. And then if we see, Bitcoin clawing back that area and pushing higher, we can look to the wider weekly zone up here between 102 and a half and 112. But I want you to note right where the basis band is, which is a 20 simple moving average, is now at a key weekly level, which is the 107 to 108 region. So understand where these things are. And if we do start to see price either resolving to the upside or downside, make sure that you have these areas of interest marked on your chart to watch how price reacts when it could potentially get there. All right, that's Bitcoin. Let's go take a look at traditional markets real quick here. And in this case, we'll take a look at Dow. We'll take a look on the daily. Dow did put in a higher low on a close. It did close above the prior closing higher high up here. Now, of course, the open was a bit higher because of futures markets, but it is showing that it can push above the prior high here at 48,133. If we do start to see it closing above there, I'd be expecting a move back to the closing high area around 48,255 to the actual high up here at 48,431 and potentially going for that upper second around 48,600 to 48,700. But if it does drop the daily low here that was just set today at 47,462, expect the next low side area around the basis to be the next target, at least in the lower term timeframes, and potentially the daily around the 47,250 to 47,260 area. And if it does drop that, then we're starting to look down to the lower second as a big area of interest, which encompasses this low over here between 46.8 and the actual swing low at right around 46.5. When looking at NASDAQ, you can see same thing. We got a high. The highs up here have been tested on the daily candle for Wednesday, and we have a higher low now solidified. So watch this swing low, 25.5 essentially. If we see that dropped, we're looking down to the basis, which is the next big higher low in this structure here, between 25,230 to the actual low swing there around 25 to 25,100 around the basis band. It's literally basis band 20 simple is right on it. If we do see price starting to push above the highs here and especially close above the 25,830 or so, then we can start looking up to the structure over here around that upper second standard deviation at 26,000, maybe a front run of 26,000 before it could potentially get there as well is actually on deck. So I would watch it during the Thursday session, which is not open, of course. Now, Bitcoin is on its Thursday candle, but definitely pay attention to some of these levels for traditional markets as well. SPY, same thing. We're back above the upper first standard deviation. Note where post is, though. It's right around the upper first. All right, so again, swung the high in this case on SPY, and dug into the actual open high up here as well, around 687, 690 area. If we do see price pushing back above there, we can look to the actual high at 690, to potentially the upper second at 695, maybe even 700 if it were to get up there. But look to the actual low here, because we did set a higher low on a closing basis here at 681, 680. If that's dropped, start looking towards the next area at 678. If that's dropped, we're going down for a gap filled by the basis around 675. And just like on Dow, if that area is dropped, we're looking down to the lower first standard deviation as the next bigger area. We've got some closes in over here. Common closes around 667, 670 to around 665. So pay very close attention. This is a wide range that between the lower second and upper second of the structure here for the bands. And I do think that on the way down, we see logical areas of support come in at the band levels as they have confluence with the actual structure in the market. So where they line up essentially with the actual market structure in terms of closes and swings. That's pretty much it for traditional markets. I don't have too much else for you in that regard. On Friday, I'll take a little bit more of a macro look at things, and see where we are through the Thursday into the Friday session. Bitcoin, this is, if you're looking at, if you're a pattern trader, this is a bear flag. So understand kind of that doesn't necessarily have to play out that way or will play out that way, but it is a bearish setup, especially because Bitcoin is continuing to fail around the 93.5 weekly here. It has not closed above, and it's got work to do. Even if it does close slightly above, it needs to get above 94, 94.5 to really go up to 96. And even then, it doesn't do much. We need to see expansion into test this prior support area between 98 and 101. All right. Otherwise, it's biased towards the downside. And with that, I hope that you have a wonderful morning, afternoon, and evening, no matter where you are in the world. Please trade safe. And of course, as always, stay safe. With all of that being said, Landy out. Take care.